I'm joined by Gianni Kovacevic at the first day of the Minds and Money Conference. So Gianni, I understand you're joining Don Cox today at the Lithium Boomer Bust table. So please discuss what you'll be sharing then.
Yeah, that's an important question for any investor. Lithium, boom or bust. Are we going to be having more electrification of energy, battery storage, electric cars? Conclusively, yes. Are we going to require more batteries for that? Absolutely. Will that require more of the components that go into the battery? Sensibly, yes. The problem is the industry itself. How do we spawn all these dozens and maybe hundreds of companies that are lithium juniors and explorers and developers? That confuses investors. So we have to look at it in a few different buckets. First of all, is it hard rock or is it brine? Okay. Personally, I like the brine space. With brine, you have Argentina, Bolivia, Chile. So I focus now, and I'm going to be participating, and I am already a shareholder of, just for transparency, in a company that's focused on Chile. Chile, in my opinion, is the best location in the world for that kind of business. A third of the world's lithium is produced out of the Salar de Atacama, and so I've recently taken a position in a company called Wealth Minerals. And they have people just have to go to their website and look at where they're situated. Within Chile, they have a very senior partner there. His name is Marcelo Awad. And so he's the Chilean sort of backstop from an executive perspective. So I like the commodity to participate with that kind of deposit, with that kind of management in that jurisdiction.
And can you tell us how investors can take advantage of so many opportunities in this space?
Well, they need education first and foremost. You know, you want to look at these things like a financial soap opera. So you need to follow them daily, weekly, monthly. Gotcha. How are they changing? And because this stuff is technology, we're talking about battery metals, it's going to change very quickly. And you're not going to be current. So a tip I will give any investor that seriously wants to follow these things is to follow Benchmark Mineral Intelligence. I think they do fantastic work. They tour the world doing seminars. They also have a publication which is, just filled with, really relevant information. And they're on the pulse, and they're looking at the pricing environment, the supply and demand of all these critical metals. Now, going beyond lithium and copper, I speak of cobalt, vanadium, manganese, cadmium, and these kind of things. So that's a pretty good utility, pretty good source where people can get current. And then you have to come to things like this, Battery Metals Day, Minds and Money, other conferences, and of course, stay current with websites like your own.
All right. And is there anything else that you're looking forward to for the next few days for this conference?
I did the opening keynote today here at the show, and I talk about energy in general, and we look at it in a couple different buckets. With the way we create energy, the generation of it, the transfer, how it's going to change, and of course utility. Utilization is the biggest change point that's going to be, on a yearly basis going forward, and how do we utilize this energy? Almost everything you buy comes with an electrical cord stuck at the back of it. And now the one thing that doesn't, which is transportation, people don't need to buy oil. What they need is transportation. So that'll change, and I believe it's going to happen quicker than most people think. And so you look at the benefit. Who wins the marathon in this shift? It's copper. It takes 300, 400, 500% more copper for each megawatt of utility when you create, transfer, and utilize energy, which is really what my book is about. My electrician drives a Porsche, which you guys have featured before. Look at the picture. The common bond is copper, so people will see that. And so it begs the question, how do I invest in copper? And what we're doing is, because in the last 3 or 4 years in this really bad bear market, you don't get any reward for exploration or development. So what we did is we founded a company called Copper Bank, which is a shareholder-friendly company built by shareholders for shareholders. So no dilution really, because we don't have any lifestyle in that company. And what we want to do is take those assets of merit that have had a lot of money spent on them, and what we're going to be doing now in Copper Bank is looking at dividends for our shareholders, where we take those projects, move them forward in a very strategic way, so that it's not dilutive to Copper Bank, but we look at it going forward. We think in the next 1, 2, 3 years, we should see, in our opinion, stronger copper prices, and that's how we're going to participate in this company that we built, which is Copper Bank.
Thank you so much for joining us, and I hope you have a great conference.
Thank you.